Welcome to this week's edition of Tips with Tom. Today we're going to discuss planned giving with appreciated assets. Tom, can you provide some tips and insight on this topic for us?
Sure, Aislinn. Considering our topic today, an appreciated asset is something that literally is an asset that has grown over the years. We hope for that in all the assets we invest in. And that usually generates a capital gains tax when we go to sell that asset.
Okay, so for someone with an appreciated asset, what are the advantages of donating that to a charity?
Understand that when we talk about an appreciated asset, there's a difference from what we paid for it to what we sell it for. That would be considered the gain. And so the capital gains tax is a tax on what the gain is reflected when we sell the property. So many people like to consider working with a charity. By making a charitable gift, they may reduce their capital gains tax and maybe sometimes even eliminate the capital gains tax.
So Tom, how does that work? And can you give us an example?
Sure, Meredith. Let's say a person were to buy a favorite stock that they'd like to have, and they pay $10,000 for this really wonderful stock. And they hold it for a number of years, and now they're getting ready to sell it because their favorite charity has asked them to make a $15,000 gift. Well, the appreciated value, now the appraised value on that stock is $15,000. However, you bought it for $10,000. Now you're going to sell it for $15,000. The difference is $5,000. That's what we refer to as the appreciation or the gain, and that's what we have capital gains tax on that $5,000. And so if you paid the capital gains tax at a 15% capital gains tax percentage, that would be $750,000. Take that away from the $15,000 value, and you only have $14,250 to give to the charity. Now, the better way to do it would be to simply transfer that appreciated asset, in this case, the $15,000 stock, transfer it to your favorite charity, because the charity is not required to pay capital gains. And so therefore, the gift you make to the charity by transferring the stock directly to the charity is the full $15,000. When you consider appreciated assets, we've talked about something that was rather small in appreciation, relatively. But when you look at highly appreciated, high valued assets like a commercial office building, or maybe a condo, or possibly some non-income producing land that a developer may want to be purchasing from you, I would suggest that that person consider something called a charitable trust. This type of trust offers considerable tax advantages, fixed income for life, flexibility of management, and a future legacy gift to the favorite charity. We might want to consider the charitable trust as a future topic because it really serves a major advantage to those who have what we would refer to as really highly appreciated assets.
That's great, Tom. Thanks so much. And if you have stock and you want to donate that, or if you own a residential or commercial or undeveloped real estate that is appreciated in value and you no longer wish to maintain that, or if you have a vacation home that your family no longer uses, think about the value and tax benefit to you when donating appreciated assets to a charity.
And we'd love to talk more with you about this topic. So feel free to reach out to Tom to discuss the options that's best for you. And thanks again for watching this edition of Tips with Tom.